Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Matt Wiener, managing director at Aon, to discuss trends in global M&A and what sectors are seeing the most activity. Matt, it's great to see you as always. Welcome back to Trade Talks.
Yeah, great to be with you, Jill.
All right, you got it. Where does global M&A stand as we approach Q3? Well, it's actually going to be in Q3 very shortly.
Yeah, so the year-over-year activity is down when compared to last year. We're continuing to see the same general economic headwinds that have continued to provide resistance for parties to effectuate their M&A transactions. These increased headwinds include borrowing costs increasing, still seeing some valuation disparity between buyers and sellers, and we're still seeing uncertainty around future economic conditions. But I will say over the last 8 weeks in particular, we've seen an increase in activity. So we're optimistic that the second half of the year will be busier than the first half.
And what sectors are you currently seeing increased M&A activity?
Yeah, so the recent trends that we've seen include an uptick in M&A in the infrastructure and energy space, in particular around renewable energy. We saw the Inflation Reduction Act really help provide the springboard for further investment in these sectors, so that continues to be fairly busy. Technology and healthcare have also been two sectors where we've seen a lot of M&A activity. And in particular on tech, we've seen take-private transactions with particularly private equity funds and financial sponsors buying public companies. And I would say also alternative transactions really continue to be fairly busy as well. And these include transaction structures like secondaries and alternative credit solutions like NAV financing.
Any particular trend you want to call out in the first half of 2023?
Yeah, so I think we've seen a little bit of a return of the kind of earnout contingent payment structure. And I think this is primarily as a result of the valuation disparity where sellers have been seeking higher valuations. The deferred or contingent payment structure allows buyers to offer more money subject to seeing performance from the companies they're buying. We've also continued to see a trend of carve-out transactions, in particular from corporate sellers. On the private equity side, we've seen a lot of private equity funds focusing on add-on transactions for platforms that they've already put in place. And then in the alternative transaction space, with respect to secondaries, we've seen a lot of continued utilization of the GP-led and LP-led secondaries.
What should deal makers plan for in the second half of 2023?
So hoping for increased activity. We are seeing more investment banks bringing processes to the market. So that's usually a sign that we'll expect to see increased activity. Also expecting to see increased competition from buyers as we had quite a few inactive parties in the first half of the year. We're seeing sellers really place an emphasis on the ability to close. So even when they're having active processes, there's been challenges around obtaining financing. So I think sellers will look for parties that are able to come to the table with the financial proceeds and are able to close with limited rights to walk away from a transaction. We also do expect to see continued regulatory oversight. And so in particular for the larger M&A transactions that require certain regulatory approvals, we do expect for those transactions to be far and fewer in between, just given that oversight. And then lastly, I would say, with all these transactions, parties are continuing to focus on enhancing their returns and ultimately limiting downside. And so we in particular at Aon continue to see parties looking to find unique credit solutions and insurance capital that can help mitigate those risks.
All right, Matt, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks, Jill.